Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, as well as our co-hosts, Murdoch Capital Partners and TAA Advisory, we're very pleased you have joined us for today's uranium and vanadium company presentations. Our next live presentation comes from Peninsula Energy Limited. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Peninsula Energy, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Wayne Hiley, Managing Director and CEO of Peninsula Energy Limited, which trades on the OTCQB venture market under the symbol PENMF and on the ASX under the symbol PEN. Welcome, Wayne.
Thank you, Matt. And thank you all for joining me today. I'm really excited to share with you the story of Peninsula Energy. We have a very unique uranium development production story in the works here in the first quarter of 2023. Peninsula Energy is presently fully engaged in restarting our Lance production facilities in the state of Wyoming. So if you're looking for a uranium company that's not an exploration or not a development stage, but actually a company that has past production experience and is presently restarting its uranium production mine, Peninsula is a story that you should really pay attention to. So the lawyers always get us a few slides. I want to encourage you to go to Peninsula Energy's website. That's www.pel.net.au. And there you can take your time and leisurely read through these cautionary statements. I really want to spend my time talking about Peninsula. I have a few macro slides about the uranium environment, the price environment. I know that there are very capable speakers throughout the course of the day that will share plenty of information on the markets. But let's focus right now on how Peninsula Energy is progressing towards uranium production. We are an emerging U.S. uranium producer. Our flagship project is in the state of Wyoming, and it's called the Lance Project. That also happens to be where I reside and where I'm coming from today. The flagship project is one of the largest U.S. uranium projects in both size and scale, and we'll talk about that. But not only are we large now, the Lance project has tremendous growth upside, and I'll touch on that in the presentation. We made a final investment decision in the fourth quarter of 2022 to restart our project. We funded it with a capital raise in the fourth quarter, and because of that, we're now really a near-term producer. We're starting our production activities as we speak here in the first quarter, calendar year 2023. The mine site staff is fully engaged in getting the project up and running today. And like I said, the Lance project has significant growth potential. Not only are we one of the largest uranium projects in the U.S. today, but through extra exploration, which we're prioritizing during the course of 2023, we'll see the further development of the Kendrick and Barber areas where additional resource potential exists. We're well funded. We have $25 million plus a uranium inventory consisting of about 500,000 pounds as of the end of December of 2022. And most importantly, everybody wants to know it, but yes, we have an experienced uranium development and technical and operation team in place. The people that I work with at Peninsula Energy and Strata Energy, our U.S. subsidiary, are second to none. And I'm really proud to have them on the Peninsula team. The Lance production, as I told you, is scheduled to restart here in the first quarter. Our plant capacity for the Lance project today is about 800,000 pounds per year of U3O8 production, although we are licensed to produce up to 3 million pounds a year. So growth in the company is going to be through growth in this project. The facility that you see pictured here is the 800,000 pound per year plant facility, but the license allows us to ramp up to as much as 3 million pounds per year. First uranium production, which will be derived hopefully here in the first quarter, will be delivered into existing offtake contracts. That's another aspect that sets Peninsula apart from our peers, is our offtake contract book, and I'll touch on that a little more. I told you we are one of the largest U.S. resources in size and scale. We have about 54 million pounds of JORC compliant resources at our facility, with that significant exploration and development upside. Corporately, we have about 1.25 billion shares on issue with the ASX. Our price as of February 13th was 15.5 cents Australian, which makes our market cap right close to $200 million Australian. We have no term debt. We had $25 million of cash on hand at the end of the year, and that uranium physical inventory pounds in our possession of about 500,000 pounds produced and ready for sales. Our board of directors is diverse. There's North American, European, and Australian representatives on our board of directors, and our management team listed here, like I said, second to none, an excellent management team that supports me in my efforts to move this company forward. I told you I have some macro slides. I think the only thing that you really need to know is that nuclear power really is gaining momentum globally and also here in the United States as a critical part of the energy mix. What we really have is a supply deficit. Producers need to resume production. We're one of those that's responding to that call. Small modular reactors are growing in prominence, and the requirements for small modular reactors is going to continue to play a big role in future discussions about uranium and nuclear power. The spot price has been well supported for a couple of years now, which helped us make that final investment decision. But the deficit that we saw in 2021 persisted in 2022, probably about 35 million pounds of less production than primary requirements. And the consensus projection for uranium is that we'll continue to see deficits, even though there's a number of companies like Peninsula now responding with new production. And again, the picture is very clear in the United States. We see the Biden administration acknowledging the need to transition away from Russian nuclear fuel supplies. That's becoming a bigger and bigger theme in Congress, and the United States is funding initiatives to make sure that we strengthen our nuclear fuel supply chain. Recently, Peninsula announced that it was awarded a 300,000 pound supply contract with the U.S. Department of Energy to supply the strategic uranium reserve. We brought pounds from our inventory into the hands of the U.S. DOE here in the first quarter. So that delivery is now complete, and we've monetized a portion of our inventory in the process. So let's talk about the Lance project. It's really why we're here today. The Lance project is located in the northeast corner of the state of Wyoming. The state of Wyoming is a leading U.S. uranium jurisdiction, and it's really the place to be if you want to produce uranium. It's self-regulated with taking on the roles of the Nuclear Regulatory Commission in state. So when I want to speak to a regulator, I travel to the state capital, not to the nation's capital. It's a lot easier for us to communicate with the regulators and get the job done. We've had excellent relations with the regulators, and through those relationships and the understandings that we can build, we've been able to progress some very significant regulatory advancements for the project over the years. The Lance project is really three places. It's the Ross project, which is the fully licensed area, and we have an in situ recovery production facilities there. We have 2 developed mine units from past production activities, and we have the potential for 2 to 3 more additional mine units at Ross. Kendrick, then, the area in blue, which surrounds and borders the Ross area, is the next sequential production area for us. The Kendrick area has amendments submitted now for our license, so that we can bring Kendrick into our operating license. And then finally, and that's going to take, maybe a year and a half to 2 years to advance those licenses to approval. But we have more than enough resources on Ross to continue producing for the next couple of years while that licensing advances. And then you see the Barber area, which is delineated in green here on this map. It's really characterized as an under-delineated resource. There's been wide space drilling across the area. We know that the uranium trends move throughout the area, and we have mineral rights really throughout the Barber area delineated in green. We intend to do some additional drilling both in the Kendrick and the Barber area starting now in this calendar year. And we expect to be able to grow the resources at the Ross or at the Kendrick and the Barber areas over the course of time. You see altogether that the Lance projects is a district scale project spanning an area 37 kilometers long by about 8 kilometers wide, or 24 miles by 5 miles. And here's our resource. Again, we have about 53 million pounds of uranium resource defined at the project, but the exploration target really in the Barber and the Kendrick areas is one that's closer to 104 to 163 million pounds. Based on the combination of exploration results from previous drilling programs and the areal extent that we've already defined the roll front trends. Imagine this being a 150 million pound project rather than a 50 million pound project. Would that change your perspective on what the Lance project looks like, the life of the mine, the ability, proven ability to produce it? This is a very exciting project. And we're now transitioning to away from the alkaline chemistry, which is the U.S. industry's primary chemistry, to low pH chemistry, which is really the global leading way to produce uranium. We've spent the last 3 to 4 years, almost 5 years, working on proving that the low pH process not only works at the Lance facility, but works far better than the alkaline chemistry process did. We de-risk that regulatorily. We have all of our authorizations in place to move forward using the low pH chemistry, and we've de-risked it technically. We did field leach trials, we did field demonstration, and then we followed that up with an economic study, a definitive feasibility study, de-risking the transition to the low pH ISR at Lance. So when we start up uranium production operations here this quarter, we'll be starting up as a low pH ISR facility rather than the alkaline facility that we were in the past. And that's what's taking us time now in the transition and restart is the construction of the additional facilities associated with a low pH process. But boy, does it work and far better than the alkaline chemistry did. We can recover uranium in a far shorter amount of time, exert a lot less energy, and consume a lot less resources in the process of doing so. The definitive feasibility study that I referred to in the previous slide shares with you some of the economics. I'd encourage you to go and look back, but we came to a conclusion that our all-in sustaining costs when we're ramped up to about 2 million pounds per year, producing out of the Ross and Kendrick areas, but not the Barber area, would be about $39 a pound. We did not include the Barber area, the larger resource area, in our definitive feasibility study because the nature of the resources at Barber is largely inferred, and it's not appropriate to do a lot of project economics based on inferred resources. Moving along, this is really how we've been thinking and how we've moved through the progression of getting ready to restart. We knew we needed to do technical optimization activities, so we did field demonstrations and we proved that the low pH systems would work very well at Lance. Then we completed our DFS, our economics, followed that with our final investment decision. And now within the next 3 months, we'll be restarting the old facilities as a low pH facility producing, and we're developing new mine units for the future production at Lance so that we can sustain a higher rate of production once we get going. I told you we have another important differentiator for Peninsula, and that is the established uranium sales contract book that we have. As a junior uranium company, we have a track record of delivering uranium into contracts since 2016. The project was actually first started up in late 2015, and we've been delivering uranium into sales contracts ever since. Those contracts today that we have in place have us delivering almost 5 million pounds through the year 2030. So we have long life, long-term uranium supply contracts. The average price, based on some base escalated pricing models, are projected to be about $60 a pound when we deliver those uranium. So the pricing of the contracts is very favorable and supportive of our production. We also have some market component exposure in our sales contracts, and those market component pricing structures have floors and ceilings. Floors around $45, ceilings as much as $80. So, in relationship to the market, if the market does go up as we expect it will, we will continue to see a better pricing actually mechanisms using the market-based portion of our contracts. We have about 600,000 pounds of the total contract that is not yet elected by the customers. They have an option on whether or not to receive that. But this year is going to be a banner year for Peninsula. We're delivering about 700,000 pounds, including the sale to the U.S. Department of Energy, to our customers this year, and that's really heavily front-loaded into the first quarter. We have arranged for supplies while we were not producing, and we'll be able to supply into to those requirements at a very attractive purchase price for us. We also we have this physical inventory, about 500,000 pounds of uranium at the start of the year. We committed 300,000 pounds for the sale to the U.S. DOE. We expect to leave the quarter with a balance of about 200,000 pounds of uncommitted uranium. That gives us flexibility in meeting our customers' requirements. Holding inventory to us is really important. As a reliable supplier, you need to have some supply on hand for your customers, but it opens the door too for transactions like the one we did with the Department of Energy. When you can obtain a good price, you have material to sell. It also gives us a working capital option as a company that's investing in our project today. The amount of working capital that we have and need is an important factor, and we're managing our cash and our cash reserves very closely. So we have a compelling uranium proposition here. The Lance Uranium Projects in Wyoming, a Tier 1 mining jurisdiction, and an excellent uranium resource. We're working towards the restart of production here this quarter. That's going well. Lance is a long life operation with an excellent exploration and development upside potential. The company today is well funded with cash and uranium inventory, physical inventory holdings, and our contracts for future sales also support the ongoing endeavors of the company. We have an excellently credentialed and respected uranium technical and operational team and commercial team. Once in operations, Lance has direct access and is well positioned to supply new produced uranium into the growing and supportive uranium market. Let me finish with this. Today, our advantage is really distinct. Idled U.S. uranium projects, those projects that are sufficiently advanced, have a unique opportunity to capture emerging market demand in a Western-focused nuclear fuel market. We're turning away from Eastern supplies, Russia and Russia's friends, and we're turning inward to supply our nuclear fuel requirements from within. Most uranium developers face significant staffing and technical, regulatory, and operational obstacles, and even market-related obstacles as they achieve production readiness. But if you look back at what Peninsula has done over the last several years, we've completed staffing and technical and regulatory and operational de-risking activities, and we possess a substantial sales contract book today. We don't need new sales to move into production. That means the Lance Uranium Project of Peninsulas is well positioned to confidently restart production now at a very low capital cost and be a supplier into the markets well into the future. So here's my contact information, and while I look over what questions may have come in, please allow me a minute to review the questions, and I will be with you. So the first question that I see here is, how did you set the price for your sale to the Department of the Department of Energy? That's a good question. We were aware of the limited amount of U.S. production available and the limited number of companies that could actually qualify and bid into the Department of Energy solicitation. Our pricing, while we haven't announced what price we sold the uranium at, it's safe to say that our pricing structure was comparable to the others who were selected for supply, and that we enjoyed a premium from today's spot market and even a premium from the long-term market. I have a question that's regulatory related, and it's clearly from an informed investor. Did the reduced time to permitting bill pass in Wyoming? If so, is that of any importance to you? I told you the state of Wyoming is a really good jurisdiction for mining companies and uranium mining in particular. The bill that's referenced in this question is actually being considered by the Wyoming legislature presently. It has not yet passed, but it's a bill that would reduce the time for permitting for rare earth producers who have a lot of uranium associated with it. Like uranium already, the rare earth people would like to have a state-controlled program for their licensing. I told you, that Wyoming is an agreement state, that they do what the Nuclear Regulatory Commission would do in Washington, in-house in the state of Wyoming. And the rare earths community, a mining community, would also like to have that type of arrangement with the state of Wyoming. I believe it will pass. It has strong support within the state because the state is so pro-mining. What is the history of the Lance projects and past production successes? Thank you for that question. The Lance projects were developed and put into production in late 2015. From 2016, early 2016 until the middle of 2019, the Lance projects were producing from 2 well fields. The projects produced on the order of 400,000 to 500,000 pounds using alkaline chemistry. As I indicated to you, we found that the project would be much more successful. Production rates and recovery percentages using a low pH chemistry. So from 2018 through to present, we've worked hard towards the technical and regulatory work that would allow us to transition to a low pH uranium production facility. So I think the past production at the Lance was modest, and the future opportunities are very exciting. So how much risk is there in getting the low pH process into actual production? We think we've done a great deal of technical and regulatory de-risking today, so we feel very confident in moving forward with that process. We've shown, through our field demonstrations, how successful that it can be, and we're excited about that opportunity. So today it's just about building the chemistry, the chemical storage and distribution facilities, and getting them enacted. We feel very good about the technical results that we'll see. And the final question that I have for you is the U.S. government providing any support and incentives to build domestic supply of uranium? Yes, absolutely. Bills are being considered regularly in Congress, and it was very clear messaging from the Inflation Reduction Act, where a lot of money got allocated to the nuclear fuel cycle. I think there was a great recognition that the United States needs to, focus on uranium enrichment and conversion, and also then, consistent with that, on U.S. production of uranium. So uh, there's really been a real tide change in the United States with respect to support for the entire nuclear fuel cycle, including the purchases for the strategic uranium reserve. Right now we don't have further acquisitions by the government slated, but I'd anticipate that as the low enriched uranium and the HALEU programs get developed by the U.S. government, that there'll be additional buying opportunities or purchasing by the U.S. government. So I'm near out of my time, and I appreciate all the questions and your attention. Thank you for your time. Peninsula Energy can be found on the World Wide Web at www.pel.net.au. The full presentation is there for your review. I thank you for your time.